finance institutions a discussion framework about how we can reduce the access to credit in terms of costs, because we saw that the lending rate on average is very high, the cost of credit is high, and it was not consistent with the National Development Plan, which focuses among others on the modernization of the economic activity in various sectors. But we do know that there are many challenges in different sectors which we cannot sort out at the same time. So the central bank has collaborated with the financial sector, the banking sector and the microfinance institutions, to discuss on the priority or key sectors which can be supported at the first time, and we came up with an agreement that the priority sectors will be agriculture and livestock and industry, just in a way to promote value chain financing first, but also to develop export schemes, the export revenues, by supporting activities carried out in this sector of promoting exports, but also sectors which can help us to substitute to imports, because we are depending a lot of imports, and the way we can rationalize the foreign currency pressures, we have agreed that priority should be given to export development and import substitutions, in addition to the promotion of industry, agriculture and livestock. Then, after these discussions based on the outlook which are given by the National Development Plan, we came up with an agreement with the banking and sector and microfinance institutions that, based on the three priority sectors, financings should be somehow eased in terms of cost of access. And we defined a refinancing rate from the central bank, whether the credit granted by the banking sector and microfinance institutions is oriented to the priority sectors. And we saw that it is suitable that the refinancing rate from the central bank would not exceed 2%. 2% for the banking institutions, in a way to apply a margin which doesn't exceed 5% when they finance the promoters in the priority sectors. That's the first channel. The second channel, which is done indirectly to the identified sectors by microfinance institutions, we came up with a way that the refinancing rate from the central bank would be 1% for the banking sector, and they would apply a margin which will not exceed 2% from the 1% of the resources acquired from the central bank, in a way to apply a final margin to the investors in the identified sectors, which will not exceed 6%.
Should we understand that people operating in these priority sectors will get credit at cost not exceeding 7% for banking sectors and 9% for microfinancial institutions?
It doesn't mean that the central bank is fixing the lending rate in those sectors, because we are in the context of the liberalization, right? And what we did is just to fix some references in terms of applicable margins. So, the credit discussion is an issue between the investors and the banking sector or microfinance institutions. The central bank doesn't interfere in these discussions, but just in a way to reduce the cost of credit in those sectors, we wanted this commercial banks, in an arithmetic way, not excluding the fact that the cost of borrowing should be less than what was defined by the margins, but we saw that the maximum lending rate would not go beyond, let's say 9% if we do an arithmetic exercise of adding up the refinancing rate and the margin applicable. But allow me to specify that the lending rate has not been fixed by the central bank. We just play on the refinancing rate, and we fix a maximum margin which can be applicable by the financial institutions when they give credit to operators who are involved in priority sectors which have been identified by the central bank in line with the National Development Plan, which goes for 10 years, as you know, starting from 2018 to 2027.
The costs you say are just for priority sectors you indicated. What about other sectors?
For other sectors, I told you that on average the lending rate is relatively high, even though it is not the highest in the region. But if we consider Burundi per se itself, we see that the lending rate the cost of borrowing is high in the different sectors. So we have identified the three priority sectors, but we didn't discuss with the other sectors. But we hope that, given that we are putting much focus on these priority sectors, which, as you know, involve the large share of the Burundian population, we hope that there will be a shift. There will be a shift in line with the economic transformation process, in a way that the credit granted by commercial banks and financial institutions will be moving from the sectors other than the ones I have identified to those ones. I mean, for example, trade finance. If there are some activities